Hi, good afternoon. Happy Friday to everybody, and welcome to a new thing we're instituting here at FX Scouts. On Fridays, myself, Chris Kamak, and Erik, who's our social media guru, we're going to be talking about some of the most pressing issues in Forex markets at the moment, which just happens to be this week. It's all about tariffs, and it may be that for some time to come. But so we wanted to basically get into a discussion about what tariffs are, why Donald Trump is such a huge fan of them, and um, and then maybe break down a little bit their effects in the forex markets, what we're seeing in the markets, what we can expect, and maybe look a little bit towards the future. So, Erik, I don't know if you want to kick us off. I know you've got some pressing questions about markets and
Uh,
tariffs.
yeah, well, I'm not an expert on tariffs. Honestly, I'm not an expert in forex market in general. I'm just a social media manager, but it's quite interesting, I think. So basically, I want to learn stuff, which Chris gonna help me with, and also hopefully you guys as well. Um, and like the main question about tariffs is just like the biggest one, I guess. Like, what are tariffs in general? How do why do does people like manage them, and why does people use them?
Right. So tariffs basically are taxes imposed on imported goods by a government. Um, so anytime you import something from overseas, if you put a tax on it when it comes into the country, that's a tariff, and they're used all over the world. They're used for lots of different reasons. A good example is tariffs on the EU uses them are tariffs on goods coming in from overseas, especially agricultural goods, and they're usually used to protect local industry. So in the EU's case, that where they put a tariff on agriculture coming in from outside the EU's borders, what they're doing is they're protecting the local farming industry. They don't want farmers in France and Germany and Belgium to to have to compete with much lower cost goods coming in from China or coming in from Africa or coming in from India. I mean, they're also used, for instance, by governments to just put taxes on things, like so. I mean, a good example, as you know, in Sweden is, there's an import duty on alcohol that comes into the country, and so it's alcohol in Sweden is much more expensive than you go overseas. So this is what tariffs are in a nutshell. They're basically used to protect domestic industry, and that's really the main tool they're used for. But what's interesting, and we're going to get onto this a little bit more, is that Donald Trump is using tariffs in a slightly different way as well. He's using them as a political tool, as a negotiating tool. Um, because if I have a free trade agreement with you, let's say, I'm the United States and there's no tariffs on automobiles, or there's very low tariffs on automobiles coming from the EU, then that's fantastic for EU manufacturers of automobiles. But then if Donald Trump comes along and says, actually, I'm going to slap a tariff on your automobiles coming into the United States, then all of a sudden manufacturers of automobiles in Europe are going to get very worried because they know that they just won't be able to compete with with uh, with local American production, because all of a sudden European cars are going to be a lot more expensive in the United States. So so Donald Trump, he knows this, and so he goes, hey, I'm going to put tariffs on you for whatever reason unless you do this, this, and this. So he uses them as a negotiating tactic, which is slightly different. Does that make sense?
Yeah, it makes sense. And also like because there's been so much news about tariffs all the time. Like it's been like five news a day at least for like the
Yeah.
past month. It feels like anyway. So that's also like one question because like tariffs is such a big news. It's like why has Donald Trump like put tariffs on Canada, Mexico, and China, for instance? Like, or at
Hmm.
least threatened with it. I know that he withdraw it now with Mexico and stuff like that, or like he's gonna put it on February or April, is it?
Yeah.
And I'm now. So like, is it just a negotiation tactic, or does it have any meaningfulness I guess.
Yeah, I mean, there's a number of reasons. um, Trump is, I mean, there's a few different ways to attack this question. Why has he put tariffs? Let's start with China, for instance. Now, China is the United States' largest trading partner. Um, there's a huge amount of goods that are exported from China every year into the United States. And Donald Trump, and in a lot of cases, Donald Trump sees that the goods that are coming in from China, they're too cheap, and that the industries in the United States that he would like to see protected. So a lot of manufacturing industries, we're talking steel, we're talking aluminium, we're talking all kinds of metalwork. These classic manufacturing industries, that they can't compete with cheap Chinese goods. So that's one way of looking at it. It's domestic protectionism. He's saying, no, I'm going to put these tariffs on Chinese goods because I'm going to protect American labor and protecting American jobs. But what he's also said, which is an interesting thing, is that he blames China for or at least partly, for the opioid epidemic in the United States. So the United States for the last 10, 15, 20 years even, I think, has had a huge problem with opiate drugs, especially fentanyl. And there's a lot of addiction. And he accuses China of of not helping, or at the very least assisting, by exporting the building blocks for fentanyl and other opioids to America's neighbors, namely Mexico and Canada. And therefore, then he's making it very easy for the drug gangs in Mexico. China is making it very easy for the drug gangs in Mexico to produce fentanyl and then ship it across the border to the United States. So he's said this, which, you can believe that if you want to. But he also sees, he's also got a bee in his bonnet about something called the trade deficit. Now, the trade deficit, the United States runs a huge negative trade deficit. It imports far much more than it exports. And in Trump's mind, he sees this as a loss in some way, as losing. And so he would really like to see that rebalanced. So what that means is that the United States would need to import less goods, and it would need to be more self-sufficient. And that way he can see the trade deficit balancing. And so you've got basically these three things going on here. You've got this domestic protectionism, you've got the trade deficit, and then you've got these accusations of assisting with fentanyl production. And then you've got in the background, you've got to think, is this all just a negotiating tactic?
Yeah.
Is all of this actually, is he just trying to get something out of these countries? So that's China. But then, and a lot of people I don't think expected this pre Donald Trump's inauguration, we have Canada and Mexico. And as we found out earlier this week, he put in a 25% tariff. He has, as we can see here, he's done a bit of a U-turn in the last 24 hours. I think he realized that the extent of the damage he might cause, especially in the automobile industry, and got a little bit nervous. But with Mexico and Canada, I think there's a different thing going on here. I mean, the Canadians will tell you that they're terrified that he's using these tariffs as a way of disrupting the Canadian economy because he wants Canada to be the 51st state of the United States, which is, we can sit here and say that's crazy, but the Canadian government certainly doesn't think it's crazy. So it's putting a lot of pressure. And again, he's accused both Mexico and Canada of assisting in fentanyl production as well, or at least not preventing fentanyl from crossing the borders. So he's putting political pressure on his neighbors. He's also putting a lot of pressure on Mexico, which he sees he wants, and this I can actually see. Most of drugs coming into the United States come across the Mexican border, and he wants a Mexican assistance, or like serious Mexican assistance in dealing with that. And he is very much using these as a negotiating tactic. So, but nobody was really expecting this. And then, of course, there's the rest of the world, right? I mean, the EU is waiting with bated breath to see if we get hit with tariffs next, or the United Kingdom. I know South Africa, is in trouble. And so we're all in a moment of flux. We're in a bit of uncertainty at the moment.
I know I watched Justin Trudeau's press conference when Donald Trump said that he would put tariffs on, and that they will go live. And one particular word that has come up to mind is trade war.
Yeah.
Yeah, so like both Mexico and Canada said like this is a trade war, not an actual war, but a trade war. And as you said, like with the EU and stuff, um, and when it's so much like money, I guess, in flow here, and instability, how will this affect like the forex market in general when there's so much trouble around?
Yeah, I mean, the first thing you understand with tariffs is that they do lead to trade wars. I mean, we're seeing this already. They lead to retaliatory action. So if you impose tariffs on someone, they will generally turn around and impose tariffs on your goods. The Chinese have done it on agricultural goods. Once these tariffs came through from the United States, they've put tariffs on agricultural goods. The agricultural sector in the United States are incredibly unhappy about this, you might imagine. The Canadians have also turned around and imposed 25% tariffs on a lot of American goods as well. And so it leads to retaliatory action. And retaliatory action and these trade wars will only lead to volatility in the Forex market. I mean, they lead to instability. They lead to a lot of uncertainty. They lead to a lot of anger as well. And this is where it will spill over from the financial into the political. I mean, there's a really interesting article you can see on the screen here now, where China slammed Donald Trump as two-faced. So you can see so before we actually talk about the effect on the markets, I do want to point out that there are real geopolitical repercussions from this. Very commonly in trade wars and in centuries past, they would very often lead to hot wars, real wars, because you go after a country's money, you make it impossible for them to make any money. It becomes a matter of survival for a country. I mean, we're not anywhere near that now, but this is just a sense of give you an idea of how important countries and governments view tariffs and trade wars. How are they affecting the forex markets? Well, I mean, and this is an interesting thing here, is that trade wars breed volatility, and it's not just a trade war that we're seeing here. If we go back to this article now, it's this flip-flopping as well, which breeds even more volatility. It's this Trump going, oh yeah, I'm going to put 25% tariffs on Chinese goods, and then 2 days later he'll go, actually, I've had a phone call with the Mexican president, and we're only going to put tariffs on a certain number of goods. And it creates, it's like a whipsaw. It creates this real uncertainty in the market. This is fantastic for Forex traders. We thrive off volatility, right? If you're a positional trader, if you're an investor, then you are probably not super happy at the moment, because these are such uncertain times. But if you're a Forex trader and you're looking at your technicals, you're probably having a great time. And this is nowhere near the end, of these tariffs. This is just the beginning. I mentioned earlier, that we haven't even talked about tariffs on the EU yet. And when those come to play, then I think we're going to see massive volatility. I mean, we're already seeing it, but I think we can expect to see this for a few months. Sorry, go ahead, Erik.
Yeah, and that's the thing, like with the EU, if we just go back a little bit, because the EU in itself is so unstable right now, with the whole Ukraine situation and everything that's going on. But if he decides to put tariffs on the EU, what is the most likely answer for it, and what will happen basically if he does it?
I mean, that's a big question, and it's quite a difficult one to answer. And let me roll back a bit, because what usually happens in times of uncertainty is that we'll see a lot of investors will move into safe haven assets. So these are things like gold, and much more and more recently. I mean, gold has been a long-term safe haven, but the US dollar traditionally has been a safe haven. So even when the United States, it's a weird contrary situation, even when the United States is the cause of the uncertainty, because the US dollar is the world's reserve currency, people will move into the US dollar from other currencies. And so you would expect in these times of uncertainty, you would expect the US dollar to increase in price. But I just want to show you, switch to a chart here. This
Yeah.
is the US dollar index, which is the US dollar against a basket of other currencies. It's commonly known as the DXY, and we're looking back to the election last year, and we can see here. So here's the election. This is where Donald Trump won the election. We can see that the US dollar went on a crazy run until earlier this year. It's been on a really strong bull run. Since Donald Trump has taken over, we've seen this crash. Not a crash so much as a correction. We've seen the US dollar falling. And this, I think, and especially in the last few days, since these tariffs are actually placed on China, Mexico, and Canada. And this has actually got a lot of Forex traders and a lot of investors and a lot of analysts wondering what is going on here. Why is the US dollar falling at these times of uncertainty when really it should be gaining ground?
Yeah.
Investors should be putting their money into the dollar. And there's a number of things. There's a number of theories around this. And first off, I want to talk about this article, which is Investors Dare to Imagine a World Beyond the Dollar. And this is something you're hearing more and more often. It's something that started about a year or two ago when the Biden administration, actually longer than that, probably back when Russia first invaded Ukraine, and the United States first started using the dollar as a weapon. They started weaponizing the US dollar. And a lot of central banks around the world started going, do we really want to be this closely tied to the dollar? Do we really want to have to use the dollar as our reserve currency? And so we've seen a lot of central banks around the world that have started increasing the amount of gold that they're purchasing. And now with Donald Trump coming in, I think that this discussion that people are having around the US dollar has really accelerated. And the big gainer from this will, of course, be the euro. And it's the second most used currency in the world, the second largest traded currency in the world after the dollar. And I mean, obviously, this article here, where you see the Eurogroup president is obviously biased, but he's just saying what a lot of other people are saying as well, is that a lot of speculators, a lot of people are looking at this chart and going, with all this uncertainty, why is this happening? And people are beginning to think, okay, hold on, maybe this is the beginning of a move away from the US dollar and as a haven. Maybe this is the beginning of the move towards the euro, which is something I want to go back to your original question now. You said, what about the euro? Now, the euro, this is the euro USD. We're going back to the beginning of the year. And the euro has been absolutely slammed for the last few months. It's had a really rough time, the euro USD. You can see here it's been hovering down and near historic lows, dropping down to 102. And but we can see here in the last few days, it's really shot up. It's been on a very big bull run. And this is not to do with what I was just talking about. This is not to do with the people beginning to move away from the United States dollar as a reserve currency. Though there may be part of that. This is more to do with, as you talked about just a little bit earlier, this is more to do with Ukraine.
Yeah.
So there's a couple of things going on here. Donald Trump has made it very clear he wants the war in Ukraine to end very quickly. And this has instigated a whole bunch of peace talks. And so investors are finally looking, maybe saying, look, maybe the end of the war is in sight. One way or another, maybe this war is going to end. And that's really good for the Eurozone. The Eurozone has had this war sitting on their periphery, draining funds and draining energy and draining political will for years now. And it will be a great benefit to the European Union to no longer have that war on its periphery. What's also happened is that Donald Trump has made it very clear that he wants the EU to pick up the tab for Ukraine. And that means both in terms of money, but also means in terms of boots on the ground. And this means huge amount of defense spending will need to happen across the Eurozone over the next few years. And we can see that the new government in Germany has just pushed through a fiscal bill allowing for a huge amount of borrowing over the next few years. Something, I mean, unprecedented, really. We haven't seen this kind of change in fiscal policy since the fall of the Berlin Wall. I mean, that's what we're talking about here in terms of change in fiscal policy. So the amount of money that is about to be unlocked by governments and is going to be poured into the European Union, both for defense but for infrastructure and all kinds of things, is massive.
Yeah.
So the euro is doing very well, thank you very much. Now you say, what if the United States, Donald Trump starts putting tariffs
Yeah.
on the EU? And I say, I don't know. Is a simple answer to that question. We are in unprecedented times at the moment.
Yeah.
I don't remember ever seeing markets like this. I don't remember ever seeing, certainly not geopolitics affecting markets in this way in any of my time as an adult. And I think we're probably in for some very, very strange times. One thing I can tell you definitely will happen is we'll see EU retaliation, as we've seen with China, as we've seen with Canada, as we've seen with Mexico. The EU will turn around and slap tariffs on US goods. The big trigger here is going to be a global, the big outcome consequence of that will be a global economic slowdown.
Yeah.
When the EU and the United States start going to a trade war. I mean, this is the engine of the world. I'm not including China, of course, but China's already got tariffs on it. But that transatlantic exchange of goods is hugely important for the world, for the global economy. So we will see a global economic slowdown. And I don't have that chart up here, but you can see that effect in oil prices already. Oil prices have been falling quite seriously because everybody's preparing for economic slowdown. We'll also, I think, we'll see these periods of economic weakness, and I think as a result we'll see interest rates coming down as well quite seriously. I mean, we saw the ECB the other day lowered interest rates. I think the Federal Reserve is probably going to have to start lowering interest rates. We're already seeing signs of economic weakness in the United States, and a lot of that is created by this uncertainty around these tariffs. So I think the Federal Reserve is probably going to lower interest rates faster than people think. I think the ECB is going to have to start lowering interest rates. And I think even besides that, we will see a global economic slowdown as a result. How will that affect the Euro USD? I'm not sure, but expect fairly extreme volatility.
Yeah. And that was also like one of my thoughts, why the dollar is so important. And now we know most of it. Why it's important. But speaking of the dollar and the US and everything, just one last question.
Yeah.
Because Donald Trump, he went live when he talked about the tariffs, and we saw like the numbers go down and everything, and new reports from the US says that inflation is up. Does that also affect the global, I guess, Forex market if the US inflation numbers goes up?
Yeah, it will. It will. I mean, this is what we've been dealing with up until earlier last year. We had the supply crunch from COVID. And then that was also exacerbated by the war in Ukraine. We saw huge inflationary pressure across the world. And so when inflation goes up, generally what will happen is central banks will raise interest rates. Inflation is still slightly above what is comfortable in the United States for the Federal Reserve, but I think they're probably keeping more of an eye on lower job growth. So with them, what they're trying to do is they need to balance inflation without slowing the country down. They want to get rid of inflation without slowing the country down too much.
Yeah.
If the United States starts slowing down like this, and if these economic indicators start showing real signs of weakness, I think more is the likelihood they're not going to raise interest rates. They're going to lower interest rates because they're much more afraid of this point of a recession, which is some of the words that we're beginning to talk about now. This is BCA Research, who are fairly sure that there's a recession incoming to the United States. And so I don't think we really have to worry about inflation right now. I think really what we have to worry about is economic weakness, and that means lower interest rates, not higher interest rates.
Yeah.
So I mean, there you have it. Does that kind of explain how tariffs are working and maybe what we're going into?
Yeah, I think so. Like, you never know with the tariffs and stuff like that, and especially with Donald Trump at the head of it, I guess. But yeah, it was a really good tutorial on like how those tariffs work and how he basically uses them right now at least, and uh, what can happen with it, I suppose. So yeah, Chris, thank you very, very much for this tutorial presentation. I feel slightly headed with that information, but it's great and it was really helpful because now at least I know, hopefully you guys also know a little bit more about tariffs and the US in general right now.
Yeah, no, thanks so much, Eric. It's been a real pleasure. And I hope to do this again soon.
Yeah,
Cheers, Ed.
yes.
Okay. And we're dead, and stream is off.